Good morning. Globally, markets and diplomacy are moving quickly, with artificial intelligence and a new wave of tech-led capital raising reshaping investor behavior at the same time as major geopolitical risks remain live. On global conflict and security, the United States and Iran are signaling a deal is close, with President Trump saying an agreement will be signed on Sunday, while Iranian officials urge caution on timing and unresolved details, including disagreements linked to enriched uranium. The prospect of a deal has immediate implications for energy security and shipping, with reporting also focused on the Strait of Hormuz and whether any reopening or de-escalation measures follow. In Eastern Europe, Ukraine says it will keep targeting Russian energy infrastructure after an attack on a sea terminal, reinforcing that energy assets remain central to the conflict's economic pressure campaign. On the global economy, the key theme is how technology is changing capital allocation and risk. Financial Times reporting highlights AI's growing role in investment decision-making and portfolio construction, and argues the shift is structural rather than cyclical. Separate analysis warns that wait-and-see monetary policy risks letting inflation become entrenched, a reminder that rates, wages and supply constraints are still the core macro variables even as markets chase the next technology story. On the technological revolution and AI, the standout development is SpaceX's Nasdaq debut, described as the biggest IPO in history, valuing the company at about $2.2 trillion and pushing Elon Musk to first trillionaire status in multiple reports. Beyond the headline, the listing is being treated as a test case for how public markets price long-horizon, capital-intensive technology bets, and how much control investors will tolerate founders retaining. The same set of themes is flowing into broader market commentary about AI's impact on trading, market structure and the funding needs of big tech. Turning to Australia, the domestic economic conversation is still dominated by household balance sheets and interest rates. SBS reports Australians are rethinking where they keep their savings, reflecting the ongoing sensitivity to returns, inflation and rate expectations. That shift matters for banks' funding mixes and for consumer confidence, particularly if households continue to prioritize liquidity and yield over risk. On Australian government policy and politics, a practical governance issue is in focus in Western Australia. The Sydney Morning Herald reports a major housing precinct in the southwest, projected at up to 20,000 homes, remains stalled awaiting state development approval despite being launched a decade ago. The immediate material point is the scale of supply delayed by planning and approvals, and the way red tape is being framed as a binding constraint in a tight housing market. For the Australian Public Service, the story is less about new announcements today and more about delivery pressure. Housing approvals, infrastructure sequencing and interagency coordination are increasingly the measures the public will judge. On the Australian share market, the global tech repricing story is the lead indicator to watch. A SpaceX-sized listing and AI-driven investment strategies can pull capital toward high-growth narratives and away from rate-sensitive or cyclical sectors, especially if confidence wobbles or funding costs rise. Finally, locally, WA police are investigating a suspected homicide after a woman's body was found near Kalgoorlie Boulder in the Goldfields, with a homicide investigation now underway.